Good morning, everybody. Hey, welcome to Tuesday, March 29th. A couple of days left of this month and this quarter. Be gone before we know it. Yesterday, not a bad day on Wall Street, and today's looking pretty good itself. We'll talk about that and more when we join Dave here in just a few moments. Before we do that, though, let's just remember that there's only one thing that you can control within your portfolio, and that's how much risk you have. If you don't know what that number is, it's vitally important, especially the closer you get to retirement. Give us a call at 863-382-0037 and walk through our core retirement design, where we'll help you design the retirement you always dreamed of. Hey, with that, we've got Dave coming up next.
Dave here. It's 8:39, 21 now before 9. Time to check in and find out what's happening to your money on Wall Street this morning. There isn't really a lot of big news going on, but we had some optimism yesterday on the markets, and looking ahead this morning, it looks like a little bit this morning as well. Let's find out why. Phillip Statler from Statler Financial Services is on the line. Phillip, good morning. How you doing?
Hey, good morning, Dave. Doing well today. I hope you are as well. But you know, it's I didn't have any fog today, but I understand it's a little foggy out there anyway.
It did get that way early this morning. It seemed to be mostly on the northern part of the county, but as I was driving in at 5:30, I mean, we were talking pea soup. By the time the sun came out, it burned off real quickly, and I was grateful for that because invariably when we've got that crud out there, we have to do a news story about picking somebody up with a stick and a spoon, and that's no fun whatsoever. So thanks, everybody, for driving safely.
That's right. Yep, it is. It's and you know, we'll get more and more of that as the weather starts to change too.
Such as it is for spring, yeah. Setting the table for the morning, we had a pretty darn good day on Wall Street. Dow almost sounded routine. We were up, as I get rid of a quick ad on my screen, we went up by 95 points yesterday on the Dow, 32.5 up in the S&P, and the NASDAQ, it just went crazy, $185.60 points and 60 cents up. And we were just kind of noodling it through before we went on the air. That's basically just kind of a slightly less crummy feelings about the possibilities of a negotiated settlement in the Ukraine, and oil might actually be bumping its nose at $100 a barrel today, huh?
Yeah, it is. You know, we started out yesterday, the oil was up around a little less than $109 a barrel, and it closed down significantly yesterday, below 106, and now we're down. Actually, my ticker just went to $100.25. So you know, we continue to fall, and if it falls below 100 today, I got to think that that's going to be good news for the indexes.
Got to be a psychological boundary in that if we saw $99 a barrel oil, but sometime midday today, because growth stocks, of course, being the most sensitive to changes like that. Nasdaq had a party yesterday. The other thing that's getting into it is the potential, and again say potential, that Russia might be more amenable to a negotiated settlement in Ukraine. And peace in the world is always good for money, outside of a whole bunch of other things.
That's true. And as we continue to work towards that, you know, it does give the markets a little bit more feeling of certainty. Whether it is true or not, that is yet to be seen.
Absolutely. A lot of stuff is going to be happening after we're off the air together this morning as all the economic reports come out later. I got to believe that the 9 o'clock report that comes out this morning for a house pricing index is going to have some effect on it, given the amount that we've been watching all of the home builder related stocks, and we were sharing that yesterday, all of the stocks that are related to construction running below their 50-day moving average. I got to believe a firmer look at the housing price index can't hurt things today if it comes out favorable, but we aren't going to get any of that until we're off the air this morning, right before the market starts trading. The big stuff that's going to happen is going to really start tomorrow when we start getting some employment numbers out of ADP, and we'll also be looking at the final revision on the gross domestic product for last quarter, and those both are generally market movers.
They will be. Tomorrow will be a big day as we look at those employment figures and that final GDP revision. You're right. Both those things could be market movers if they don't line up with what everybody expects it to be coming to fruition tomorrow in the report.
And the employment numbers for the last couple of months, I mean, they've been wildly out of sync with what the market expected. I mean, I remember last month the ADP number was something like 100% in the opposite direction of what people expected. And I kind of, I always look at these things when I get things that are that far out of whack, I get a little bit nervous until those numbers are actually in the hopper, because you want them to beat the expectation, but not by so much that it destroys credibility as well.
Oh, that's true. And we have to wait till Friday and we'll get the government numbers that'll come out on Friday. So that will be, that'll tell whether or not ADP was within the ballpark or not.
Absolutely. Is there any expectation as to what we're likely to see this week? Has the market put out any expectation as to what they plan on seeing on Friday?
So on Friday, the expectation that I have is 490,000 non-farm payrolls at an unemployment rate of 3.7%.
Given the fact that the market is pretty full to begin with as far as full employment, 490,000 new jobs would end up looking pretty good. If ADP backs that up as being an increase from the prior month, we'll be happy with that.
Absolutely. I mean, I think that would be good. And I mean, you're looking for unemployment rates, unemployment claims to go up just a tad. But they were all, I mean, let's face it, they're all-time lows last week. So a little bump is definitely not a bad thing.
Yeah, we're down into statistical wiggle room numbers right now. I mean, it starts approaching wobble when you start getting as low on the claims numbers as we are. Oh, I hadn't noticed. We might actually get the precursor to all of that today. At 10 o'clock, they're going to release the Jolts job openings report, which might give us a precursor to the ADP.
It could. I mean, I've got expectations for 11.1 million job openings right now.
And it was 11.26 the prior month, so they're expecting the number of openings to go down, which to me, doing the math, I figure that means more people got employed.
It sounds like it, doesn't it?
We'll take anything we can get. We're into that slow period of the month right now before earnings season begins, but I gather there's some food suppliers in the name of Dave & Buster's that told us how well they did, huh?
Well, Dave & Buster's, they're that restaurant chain where adults can go and play and have some bars there and some food and just entertainment and the whole. And so, but they did not have a good quarter. They missed on top and bottom line by bottom line. They missed like 8 cents a share. They did make a profit of 52 cents, but just not as well as expected. Their results, they said, were strong in light of ongoing COVID-19 headwinds. So, they're still dealing with a lot of supply chain issues, different locales having different rules for COVID-19 restrictions. So all that played into Dave & Buster's numbers, trading down today almost 5%.
Oh, I'm actually kind of surprised by that, because I figured that as we started to lift the restrictions last quarter, I figured a place like Dave & Buster's would probably be one of those places that would go gangbusters.
You would think, and it could be more supply chain issues than it is the other, and staffing issues. Let's face it. I mean, just look at restaurants around here, right? They have two issues: staffing and supply chain, not getting the food they need. So both those things are going to be impacting Dave & Buster's.
Valid point on that front. I'm just kind of surprised, figuring that was one of those lifestyle businesses I expected an increase out of. How about the other report? I know you said you had two.
Yes, sir. So the other one I have is Jefferies Financial. They're an asset management firm. They had better than expected profits and revenue for the quarter. They earned like $1.23. They're expected to only make 89 cents a share. So good for them. Profit did fall though from a year earlier. Again, they've had some challenging trade environments is what they're blaming it on. But they are trading up today 4.3%. $33 a share right now.
Well, we'll take that as the beginning of a good day. Looking at the markets from yesterday, again, it was generally an update yesterday. Dow and the S&P almost looked routine yesterday. The Nasdaq continued to recover. It starts out over 14,350 this morning, which ain't a bad place to start. 45 minutes before we open the markets this morning, Phillip, what are we looking at in the futures so far?
On the futures, we've got a lot of green ink, and it's increased substantially since I looked at it at about 6 o'clock this morning. So we got the Dow up almost 260 points. That's 0.75%. S&P 500 is up a little over $35, which is a little over 0.75%. NASDAQ 100 up $150, which is up 1% right now. So, and then let's add in the Russell 2000 because it's having a great day too, up $23, which is about 1.1%. So good news on all the index funds. However, on the commodities front, we're seeing a lot of give back today. We've got silver taking a real big hit, down 4.25%, now way below $25 to $24.11. That's down over $1 from where it closed yesterday. We got gold down 2.5%. That's almost $50 below where it closed yesterday, and it's below 1,900. It's at $1,890 an ounce.
I know a lot of guys that aren't going to be happy with that.
Yeah, exactly. You know, that's falling pretty fast. And then we got gold. Yeah, the black gold, crude oil down 5.4% right now to $100.25 a barrel.
We're getting dangerously close to that 100. It could be party time if it breaks through 100 this morning. By the way, we've always been watching the rate inversion. The 5-year Treasury bill is currently trading, holy crud, almost a full percentage point, almost a full 1/10 of a percent lower than the 10-year is right now. So that concern over the interest rates is starting to get a little bit more permanent right now.
Well, you know, it's one of those things that I think they're probably looking at a lot of different things out there when it starts looking at interest rates. And that inversion is, you know, it's going to affect the markets as a whole eventually.
It will eventually. Right now, war and peace seems to override, which I certainly understand. Overseas markets was a mixed bag on the Asian rim. The European markets are looking at us and saying it's party time. France is up by like 4% halfway through their day. Germany's up by better than 3%, and the Great Britain markets are up by 1.3% halfway through the European trading day. So it's not a bad day over there either. Phillip, getting a look at retirement strategies and knowing what's right for my time and my needs and my risk tolerance, that kind of takes a neutral pair of eyes. How do I find you to get that look at my plans?
Then give us a call at 863-382-0037 to schedule their core retirement design, where we'll help them design the retirement they always dreamed of. And then check us out this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning at the same time on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Appreciate it. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope that your week's going well. I hope you'll join us again tomorrow. Same time, same place. Until then, have a great day. Bye now.